A new record has been set for the most money ever paid for a pair of sandals. Do you wear sandals sometimes, don't you?
Yeah.
So didn't we?
I mean, like flip-flops.
Right, flip-flops. You came to dinner with Hainer and I one time in flip-flops, didn't you?
When it was like 90 degrees out.
Yeah. Someone just paid $208.
You were looking at my sandals? You didn't like my...
Well, I just heard you coming.
You didn't like my flip-flops? They're so easy, you know? You don't have to tie your shoe.
It's like Crocs.
Find the socks.
It's like Crocs.
It's like, I'm just running out the door with flip-flops.
Someone just paid $218,000 at a recent auction for a, quote, well-used pair of brown suede Birkenstocks that belonged to Steve Jobs.
That's ridiculous.
It is. It really is. So let's talk naughty or nice. We're coming up on the holidays, making a list and checking it twice. I'm going to describe a scenario. You tell us if the financial advisor is being naughty or nice, okay? All right, number one. A client usually meets with this advisor once a year every November. But this year, the client retired in May and wanted to meet then to make sure everything was in order for his retirement to begin. At the beginning of their meeting, the advisor said, "This can count as our meeting for the year." Is the advisor being naughty or nice?
Well, in my opinion, it's naughty. We don't have a limit once per year. We actually ask our clients in the beginning, when they're prospective clients, what do you prefer? And it's really interesting to hear the answers. We didn't used to ask this question, but some people say quarterly, some people once a year. And it's funny, even the people that say once a year, sometimes we're meeting them 3 or 4 times a year.
Yeah.
Because you're
just managing what their expectations
right. And so we can go back and say, well, you expected to meet with once a year, but we've met with you 4 times this year because you had that scenario where you were selling that rental house and you wanted some tax planning strategies, and we did your taxes.
Oh, the pop-ups.
Right.
There's always something popping up.
And since we do taxes for probably over 95% of our clients that we manage their wealth, that we basically we'll see them and we're talking to them about what's going on, because it's never just here's your taxes, have a nice day. It's, oh, by the way, I need to take RMDs on my IRA. Oh, and by the way, you talked about that charitable trust and we got to figure this out. Oh, by the way, it's I'm thinking about doing this. I'm thinking about doing that. Social Security, Medicare, it's endless, right? Our meetings can go an hour and a half, even though it was supposed to be just about taxes.
I don't know if that's the industry standard, but I think that's a great thing that you all provide.
Well, it's people want that.
I mean, doing their taxes.
They want that one-stop shop in the sense of the answers, because they've done whoever they are right now, a lot of large financial advisory firms, the Fidelity, the Charles Schwabs of the world, right? TD Ameritrade have done these surveys to their own clients, and what. And it all, the higher the net worth, the more, the bigger the percentage that they want a one-stop shop. And it's because they get
Well, you're making everybody talk to everybody else. I mean, you've got everybody talking, so you have the information from all aspects.
Right. And so they, let's say, people that are under $500,000 in investable assets, they don't mind it being separated. They'll do their own TurboTax, right? Their situation's not that complicated, right? But once they get up to the 2 million to 5 million, then the 5 million, 10 million, the percentage increases that they feel like their financial lives are fragmented. And when they tell me that, I'm like, well, I don't tell them on the first meeting this, but the second or third when we're actually making recommendations, I say, well, the reason you feel that way is because they are. They are absolutely fragmented and disconnected. You just told me the CPA doesn't even know your investment advisor, the AKA financial planner that is making these recommendations that affect your taxes.
Yeah.
I mean, you have $3 million in a brokerage account, and they generated $300,000 of ordinary income, which could have been long-term capital gains taxed at 20%, but they were taxed at your tax bracket at 32%. And because there's no communication, there's no tax loss harvesting going on. So
enter
right
integrity financial planning.
So the point is the naughty is we don't have a limit on the meetings. We've had people that we've met with 8 or 9 times in a year, which is not they wanted to meet, is we had to meet that much because of the complicated situation, death in the family, business being sold, real estate being sold, and it just required that many meetings. It wasn't that we need to see you again. We just had to.
Yeah.
Because it's, some of the situations are so complex, and we're meeting with our partners, whether it's a tax planning attorney or an estate planning attorney or Kim, our CPA, or whatever, right? We're meeting with a specialist. So that does count as a meeting because I'm involved in it, right? So I think there shouldn't be a limit.
So naughty.
Naughty.
Number 2, naughty or nice. A prospective client calls to make an appointment with a financial advisor to discuss working together and is told that the advisor has an asset minimum, which the prospective client doesn't meet. Is the advisor naughty or nice?
I don't think the advisor is naughty. Some people maybe think so. I think it's being nice because they're not wasting the prospective client's time, right? I mean, I had this happen when I was in the process of building our commercial office building. We were going to build a new office building and went through the process, and I got referred to, 15 different general contractors, big commercial contractors that build shopping malls and major skyscrapers and big, huge development projects. And I'm calling about my little tiny office. Right?
Yeah.
And they were nice. They were nice and said, yeah, we really don't work on anything that small. Your project's only going to be about $1 million. It's not big enough for us. And
it's kind of respectful in a way if you think about it, because you want to super serve the clients that you have.
Right.
It may be that, okay, if we take on a whole bunch of even small, we're not going to be able to service everyone.
Right. And what was nice is that most of them that said, hey, you know what? We can't handle that project because we only work on projects that are, $5 million or $10 million or more. But we know some really good contractors that do that in that space, and they're great. Here's 2 or 3 names.
Yeah.
And that's how I got some of the best referrals, actually, was from other contractors that were respectful enough to tell me that.
Nice.
And we're in that position now.
Good customer service for one.
It is, right. And you think highly of that company because they were respectful and didn't waste your time after I sent them all my information, right? That was just an initial phone call. We have a $2 million investable minimum at this point in our business because it's literally, we only have so much time in the day, and we are best serving people that we can make a large impact, a significant impact.
I've heard you say that before.
Lives.
Yeah, that makes sense.
And the idea is, look, sure, I would love to be able to help everybody, but it's taken almost 20 years to get to this point where we can help families that have some extremely complicated situations.
But are you the good contractor that goes, you know what, I got somebody I can refer you to?
Yeah, we actually have a couple of financial planners, and there's a difference. Financial planners that also do taxes that we refer to when they don't meet our investable minimum.
Nice.
So we're not saying no. We're saying, look, we can't help you right at this moment in time, but we do have someone that we have vetted, that we've looked at, and we've kind of realized they can take you and help you and do something similar. And because they're comprehensive planners, these aren't guys that are trying to just sell a product or shove a mutual fund down their throat, right? They literally are, doing a comprehensive financial plan, which is what everybody needs if they are planning to retire or are retired and want to stay retired. So there's nothing wrong with having a minimum and saying that I can't help all people.
I get you having a minimum too, because how many markets are we in on the radio? Are we in 20 markets, 15 markets?
No, it's not that many. I don't have to look on the website. Yeah. You can go to the website and look.
Okay. Yeah, we can do that. Retirementplannow.com. Let me ask you this one. Naughty or nice, a 40-year-old client leaves a voicemail with her advisor to say that she wants to be invested more conservatively in her IRA because she's worried about the market's performance for the coming year. Her advisor emails within an hour and says that changes have been made accordingly. Is the advisor being naughty or nice?
Yeah, I don't agree with that. That's what does the 40-year-old client do for a living? What does she do? I mean, is she an engineer? Is she a nurse, a doctor, an attorney? If you really truly respect the advisor, let them do your job. And part of their job should be this. You fill out a risk tolerance questionnaire. It comes back with a score, right? The score is a 7. And for a 40-year-old, she should be a 7 or an 8, right? Because she's got a long-term horizon to...
A little more risky.
Yeah, she should be able to go 20, 25 years risk horizon, right, time-wise. So if she answered the questionnaire and she came back at a 7, which is a pretty high risk, then she should be invested like a 7 or very close to that, right? It's not exact science, right? It's close. To go ahead and switch her to a 3 based on the hunch of the 40-year-old, right? Real wealth has been built by saving and investing appropriately to your risk over a very long period of time. You don't switch one year because, I think I'm scared of the market. I'm going to go conservative. That's when you end up selling, high.
Yeah.
or selling low and buying high. That's what happens constantly over and over and over again. So, and to just email it, no, we're not going to switch somebody just because they want to go more conservative. We're going to go, we have you invested, and here's the reason why. Once we explain the process, we have you invested like this because of this. And you went through these questions. Do you want to update the risk tolerance questionnaire? I would actually email back and say, let's schedule a time and we'll go over your risk again. Last time you were a 7, maybe that's changed, and that's okay. If she answers a 5 or a 4 now, that's fine. We'll change the portfolio based on the science, because the science is real and legitimate. Since we've been utilizing this, we get less calls and less questions like this, because it makes sense to our people. Like, okay, I'm a 4. I'm gonna be investing like a 4 because I'm 70 years old and I don't want to lose all my money anymore. Right? I'm too conservative to invest like a 40-year-old.
Well, I don't know if that's where this leads, but on your website, retirementplannow.com, there's a section called Discover Your Financial Health. And it says, try our planning discovery tool to learn more about...
It says, what's your financial health? But that's close.
What's your financial health? Oh, it does? Oh, I clicked on it. This says Discover Your Financial Health.
Oh, right, yeah. Well, the first one on Retirement Plan Now says, what's your financial
there you go.
health? Yeah.
So click on the financial health one.
Yeah.
But it is, so it's like a 9-question questionnaire, right?
Right.
Find out your current financial health grade. And number 3, get potential action ideas just for you. If you want to check that out, that's a really cool tool. And that's free, right? On your website?
It gives a grade. It could say you're a C, right? Because you haven't saved enough, or, your age, or whatever, whatever's going on. You could be an A+, right? But it gives you kind of a little report and actually gives you some action ideas, right? Oh, hey, you have high mutual fund expenses in a taxable account, or what you're trying to do is you're missing out on the match on your 401k or whatever it may be.
Well, and Brian's right. You got to click through it to see where it leads to. But you can check it out right now at retirementplannow.com.